What's up, everyone, and welcome to another Bitcoin market update. In these videos, you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin and others, and also see where we are looking to buy and sell these crypto assets ourselves. Being able to analyze the price action for different crypto assets is incredibly important, as it will help you on your journey towards achieving your goals. So let's get into it here with Bitcoin on the weekly time frame. You can see the weekly candle just printed over the last hour. We had a pretty bearish candlestick here. If we pull up the volume, we can see we had an above average bear volume candlestick after increasing bull volume. So that does increase the probability that our lower high has been set here at about 41,322. But it's not guaranteed until we break the low of this previous week, which is down at about 33,290. So if we do break the low of this last week, we will officially be testing this light blue level for the second time. And like we always talk about on this channel, the more times that you test a support or resistance level, the weaker it becomes. So this level is going to be weaker the second attempt as we go down. If we do end up going down, we're going to be trying to form a higher low, if we're a bull, above this $29,100 level, and then come up and try and form a higher high to change the trend back to the bull's favor. I personally don't think that that's the more likely scenario here. I think the more likely scenario is to potentially go to a lower low, and the reason for that is because we are in a confirmed daily bear trend. Not a daily bear trend. We are in a high time frame bear trend. If we look at this from a candle body perspective, we can see that we have a high, low, lower high, and then lower low pattern here. And now we're coming up. This potentially is another lower high in comparison to this one. And then we may see a lower low. We'll see what we end up getting in the coming weeks, but it's important to realize, the market sentiment that exists right now, and it's also important to recognize the market cycle that we are in. And the market cycle that we are currently in, or the part of the market cycle that we're currently in rather, is, in my opinion, the other side of the bull trend. So when you have a crazy run up like this and you're in a bull market, the other side of that is a bear market. That's just the way that markets work. You can make just as much money on this move here as you can on this move here. So obviously it doesn't seem as fun on this move, potentially, if, on this move you and all your buddies are making money. Here, you can still make money while other people lose money if you know what you're doing and you're intelligent with your trading and investing decisions. So this is kind of the area that we're looking for, this light blue zone, to either hold or not hold. If we do end up dropping below this zone and closing 2 candlesticks below it on the weekly time frame, this will end up being a strong resistance zone for price that I will look to short on a retest and then target the level down here at about 19,600. If we do end up negating this candle and going above its high without breaking the low over the next week, our next resistance level is going to be the R2 weekly pivot up here at about $46,300. So going to the lower time frame. So this is where I like to look at like the 3-day time frame to get a gauge for, outside of the daily time frame, what are a bit higher time frames looking like. So right now what we have is just really a lot of chop down here. We have a pretty nice low here of people buying the dip, come up, lower high, higher low, lower high, lower low, higher high, and now we're potentially forming a higher low in comparison to this one. So for the bulls case, this is looking good for the bulls with declining bear volume that's below average. You can see it's below the moving average here, the orange line. So that's good news to the bulls for a potential rise in price, but we have to keep in mind that this is a lower time frame than the weekly, and the weekly right now has this very bearish candlestick here. So just keep that in mind if you are a bull, and just remember, everything on this channel is for educational purposes only. It is not intended as financial advice, folks. So keep that in mind as well. On the 3-day time frame, as we continue to analyze the price action here, you can see that this last 3-day candle had a decently long lower wick of people buying the dip. So we'll see if we can end up rising over the next 3 days to potentially make that a low. But if we look at this from a daily perspective, this is where it really looks good for the bulls. So for the bulls case, you can see we have this light blue support level that we've been talking about here inside of our weekly support level, this bigger light blue zone. So this darker blue zone, which is this candle from June 12th, should hold as support. But you can see what happened was the momentum that we had to the downside due to momentum indicators like the Ichimoku cloud flipping into the most bearish scenario that it can be in, which is this scenario right here, where the cloud is red, the Tenkan is below the Kijun, both of those are below the cloud, and the price is below the Tenkan right here. You can see we validated that as the most bearish scenario right here. Subsequently had a pretty significant drawdown, but then bulls bought the dip pretty aggressively with a long lower wick and then increasing above average bull volume here. So that's good news if we're a bull. The things to keep in mind are a couple things. One, the other thing that's been pushing price down besides the Ichimoku cloud is the super guppy. We've talked about this over the past few videos, but this is just a collection of exponential moving averages, and you can see that as it goes down and these expand, this is going to be strong resistance, this red zone. You can see we go into it right here, boom, we reject off of it pretty dramatically. We drew down about 19% from its high, so this is a pretty good shorting opportunity here. This indicator, what we've talked about when I've explained this a few times, is when this first expands, like right here, when it flips from green to red, the first test of this is always a very strong trade to make. Because if you look at this, and we can kind of back test this by looking at the chart and see when was the first time we tested this green zone after this trend, right here. We test it, boom, we get a pretty significant rise in price of about 23% over the course of about a few days. So, and these start to expand, meaning they are becoming further and further apart. And as they expand, they become stronger for propping up price. You can see we tested again here, boom, we're off to the races. Tested again here, nice bounce. Test again here, bounce, here, bounce, here, bounce. So we just kept bouncing off of it, bouncing off of it, bouncing off of it. And you can see right here, I mean, these EMAs are extremely expanded. I mean, there's so much white space in between each one. That's when you know you're really getting blown out of proportion there from what, the price potentially should be doing. Because when these are really expanded, it means the price has moved like this extremely rapidly. And people are either really euphoric on the bull side or really bearish on the downside if you see these expand like that on the bear side. So we bounce off of it, we bounce off of it, we don't bounce off of it. Right here, first time we don't bounce off of it. We go through it and we close below it. This is significant. We then come up, we kind of mess around with it a little bit here, and then we look like we're going to flip it back bullish, and then boom, we have this snap drawdown, and we go into this expansive bear trend, which rolls the EMAs over, and the fast EMAs, these dark blue ones, which are the lower time frame EMAs, that's what makes them faster, is it's a lower number than the higher time frame ones, which are these ones. These are what we consider the investor EMAs, and these are what we consider the trader EMAs. So the trader EMAs are the ones that people that are trading on lower time frames are going to use more often, and these are the ones that investors and longer term players in the market are going to be using. So if we're looking for an entry and we're a longer term player, we don't care about this price action here. All we care about is the moment that it touches this red line once again, which is right here. So this is where we're going to make our entry right here. We make the entry, boom. Here's a profitable move already. So if you just play the macro moves, even those can be pretty significantly profitable for you. So now that this is expansive, it's going to take several stabs of this before, just like it did here, for us to break below it here. It took us stabbing this, moving average several times on this way up before eventually we broke through it. So keep that in mind as we are now in a confirmed bear trend with the trend following indicators clearly on the bears, in the bears' favor rather. So although we have some short-term bullish price action here at the daily close, we are still in a bearish scenario here, in my opinion. The gray zone is going to be our main resistance zone. This starts at about 37,400, goes up to about 39.8. Lower time frames. Let's go to the 6 hour. So on the 6 hour time frame, we can see right now that we have this confirmed bear trend right here with our high, low, lower high, lower low, and we closed both of these candles below the key low here. This yellow zone is our resistance zone. It's this white candle right here. You can see we came up, we did wick above this briefly, and now we are trading below this right now. So this is the main resistance zone for price at the current moment. If we do end up going above this zone and closing 2 candlesticks above it without rejecting off of it once, this will be a strong support zone for price that I'll look to go long on for a short-term scalp long. We now have opened up the new week, so we now have a new set of pivots here. You can see the first pivot here that will act as resistance is around 36,700, and the next R1 resistance is up at about 40,160, and our support level is down here at roughly 32,140. So this is what we're dealing with right now on price. So it's important to keep in mind as we're looking at stuff, to keep in mind the momentum of the market. Right now the momentum is clearly to the downside. In addition to that, we also are in potentially that part of the market cycle where things are starting to kind of roll over. These indicators are starting to roll over to the bear side, and people are starting to become more and more bearish, which potentially could push the price lower. So that's important to keep in mind, but you can benefit from still going short on crypto assets and benefiting from moves like this. So that's all I got for this video, guys. If you like this video, give it a like down below and subscribe for future educational content around crypto and blockchain technology. And if you'd like to know how to make money on the bear side of the market like this, as well as the bull side, the beginner technical analysis course that we released on Leutheria.com, there is a link for the description for that in the description below. Can't talk. And this will help you understand how you can actually do that, how you can make money trading a trend on the bear side as well as the bull side, how you can read candlesticks to determine when a reversal might be occurring, how you can analyze volume to help you understand when reversals are occurring, or there are potential profitable opportunities, and much, much more. So we've gotten some great reception from the students when it comes to this course in laying down that foundation to get started trading these different crypto assets. And so I highly recommend it for you. If that is something that you're interested in, check it out, and you can actually get 20% off that course through the remainder of this month. And that's it. And so I will talk to you guys all tomorrow. Onward and upward.